Hey, good morning. I'm Kirk Chapman, with Head of Strategy at Galileo Financial Technologies. Thank you for coming. We're going to lock the doors to make sure no one leaves. Seriously, in this session, we're going to be exploring the evolving relationship between digital currencies, like Bitcoin, and existing institutional financial infrastructure. I'm going to take 5 minutes to do a quick intro. We'll introduce the panelists, and we'll move on to questions. From regulated exchanges to crypto-backed payment cards to CBDCs and beyond, the possibilities and use cases are expanding for digital currencies to connect to and operate within existing financial infrastructures. By bridging the gap between decentralized currency and traditional financial systems, this intersection represents a ripe opportunity to increase the utility of digital currency for existing users, drive more mainstream adoption of digital currencies, and leverage the best aspects of the decentralized and traditional financial worlds to create products and services that offer entirely new types of value for all stakeholders. However, for the full potential of this major market opportunity to be realized, there are some key challenges that need to be solved. And today we'll talk with these three companies who are operating within the space to find out how they're navigating those challenges on the way to developing products and services that serve as conduits between digital currencies and existing institutional infrastructures, harnessing the potentially transformational power of that confluence. That said, we'll meet the panelists. Kristen Boggiano, we'll start with you. Kristen's a co-founder and president of Crosstour, a global cryptocurrency exchange offering capital market capabilities with offices in India, Bermuda, and the US. They're founded in 2019. Crosstour leverages expertise in trading, technology, operational infrastructure, which will be key to today's discussion, regulations, and compliance to make cryptocurrency and digital assets accessible to retail and sophisticated institutional market participants. Kristen is a structured products, regulatory, and digital asset expert with over 20 years of experience in capital markets on both the buy and sell side. And prior to founding Crosstour, she was chief legal officer at Alpha Point and also founded the Digital Asset Legal Alliance. Kristen, good morning.
Good morning.
You're here. Dan O'Prey is a chief product officer for Bitcoin and Crypto at Bakkt. Dan has been involved in Bitcoin since 2013 and worked in the wider space for 8 years as co-founder of Hyperledger, which he later helped establish at the Linux Foundation. As a chief strategy officer at Digital Asset, Dan worked with regulated financial institutions and stock exchanges across the world. Bakkt is working to connect the digital economy by bringing innovative Bitcoin experiences to the customers of non-Bitcoin native businesses. For example, bringing Bitcoin trading to local and regional banks and credit unions, and working with brands to enable Bitcoin rewards. Example is even enabling gig economy workers to get paid a portion of their earnings in Bitcoin. Dan, good morning. Thank you for joining.
Good morning.
Tom Pageler, CEO of Prime Trust, which provides an infrastructure that merges digital assets with traditional finance. Prime Trust powers innovation by helping fintech and digital asset companies build seamlessly, launch quickly, and scale securely with a full set of APIs. The company is a regulated financial institution by the state of Nevada, and Tom has a background in both security and business development. He started out as a Secret Service agent, was a founding member of the San Francisco Electronic Crimes Task Force, and has held leadership positions at DocuSign, Neustar, and JP Morgan Chase. So you'll get a softball question about Jamie Dimon at some point in this discussion.
Jamie's a good man.
Tom, thank you.
Thank you.
I did put together a few questions just to guide our discussion. If we have time at the end, we'll take questions from the audience. Let's go ahead and dive right in here. Level setting on the confluence of digital currency and traditional infrastructure. There are a lot of different use cases and example of what that looks like. For Galileo, we're purely focused on supporting a number of clients operate in the digital currency-backed debit cards by powering and optimizing those cards be converted at point of sale and help make purchases seamless in real time. I'd like to know from you all, start with you, Kristen, actually, how your company is leveraging this intersection of traditional infrastructure and Bitcoin crypto to offer value to your clients.
So Crosstour has an operational infrastructure, regulatory, compliant, risk management that I think feels familiar to institutional players. Because we come from the traditional background, we can speak to all traditional financial institutions and help guide them in their journey to digital assets. Again, we have offices in the US, Bermuda, and India. We're regulated in Bermuda and in the United States. So our dialogue with institutions is ongoing, very fluent. The number of people that want to have us educate them is just expanding by just daily. I'm sure you guys are seeing that as well. They kind of want to adopt me and put me into there. And I'm like, I actually run a company, so I can't go and educate your entire staff, but come. And I actually enjoy the whole dialogue, the educational dialogue with our institutional clients.
Is it primarily around regulations? Is that primarily where the questions are, like, what is regulated? How do I operate in that environment?
Truly, it's everything. I mean, sure, the regulatory uncertainty, the gray area that we're operating in, is clearly an issue for most traditional financial institutions. We don't have clarity.
I'm going to ask that question later, so just hang tight.
Just hang tight. Don't go all out right now on regulation.
Yeah.
It's accounting, it's operations, it's risk management, it's compliance, it's legal. They want to know, how can I actually access this burgeoning market with all this promise without tripping over my internal policies and procedures? And they really need to educate back office, middle office. The front office is like dying to get in. And so we're Crosstour is handholds institutions in their journeys. So that's what we do. We have an exchange in the US, Bermuda, and India. We have lending, structured products, an OTC derivatives desk out of Bermuda, facilitating the access to that market.
Tom?
Yeah, Prime Trust, we're literally a bridge between the traditional financial institution into DeFi digital assets. So we're both a financial institution, as you said. We're regulated out of Nevada as a fully licensed trust. That means we can actually do IRAs, everything you would ever do with a trust. We are a financial institution in that we provide the rails in. And what I mean by that, traditional fiat. So in order to get to digital assets and actually enable DeFi solutions to come, you still have to power it, get the feel in of some type of current currency that we use, the fiat. So we offer the rails of credit, debit, ACH, wires, FX, all that to get in there. And then we have a technology component that creates APIs that allow anyone in the DeFi space, in the digital asset space, to easily integrate with us. And then once they're integrated with us, they get the access to our AML KYC, Bank Secrecy Act, the BSA, so you know who your customers are. You get the traditional fiat in there, and then you can go power and do the things you want to in the DeFi space. And we also will custody those assets. So we're literally the bridge there. It's really fun to watch.
Yeah.
So Bactar, we're a platform for helping primarily financial institutions, but also non-financial institutions who aren't crypto companies, who don't or can't, for regulatory reasons, necessarily touch or provide crypto services directly themselves, to be that sort of one-stop shop under the hood for them integrating our services to provide to their end users. So we're very much a sort of B2B2C model. Similarly, we're regulated by the New York Department of Financial Services for trust license, BIT license, money services business. We've got MTLs in all states in the US that we need them. And we provide those services embedded within our partner's application, sometimes white label, sometimes powered by Bact, to enable them to offer their users crypto trading, Bitcoin rewards, get paid in Bitcoin, as well as paying with Bitcoin. So a variety of different services, mostly within financial services, but we also work with merchants, brands. Starbucks is one of our partners, so you can pay with Bitcoin inside the Starbucks app to buy your coffee. And then we're going live with, starting with the community banks and credit unions that you mentioned through our partnership with Fiserv, Finastra, and MasterCard as well.
Thank you. You guys all touched on the next question, which is really around, when you think of institutional infrastructure, you have the classic hardware type. I think that's what everybody thinks of. Maybe it's the rails of MasterCard, Visa, associations, legacy banking systems, et cetera. But there is this component of legacy infrastructure, which is specific to regulation. And so, Dan, I'm going to actually ask you this question to lead off. But given the evolving regulatory landscape, New York is different than Nevada. Europe is different than US. You're out there in it wasn't the Bahamas. Bermuda, yeah, which is very different as well. What are the key points of clarity that you all see that are needed to more fully allow this intersection of traditional infrastructure and digital currency to continue to grow? And when I think of that, I am really thinking about there's KYC, there's AML, there's policy, there's regulations. What do you think needs to be clarified to help this space grow?
Yeah, I think it's well, it's a big question right across a variety of different topics. For us, we're regulatory compliance and compliance and security first. So we do all the KYC and AML and KYT for Bitcoin coming in and out of our platform. I think for us, the big ones are maybe outside of Bitcoin. I think Bitcoin's got a little bit more regulatory clarity, particularly within the SEC, than some of the other cryptocurrencies that our partners want to offer to their consumers. So that's still a evolving and uncertain climate. And then there's the products and services around interest-bearing accounts or lending or earning yield on any coins that are stored with us that, started to see some enforcement actions within that space that make that a little bit more challenging, and clarity of what banks can and cannot do exactly whilst touching even through a third party like ourselves is still getting closer to, but not quite as clear in terms of sort of guiding and advising our particularly banking and financial institution partners on where they can play right now today.
I think for us, I'm pretty excited right now. I mean, some of the things happening. So we saw that executive order come out. It's not that the executive order had a lot to it, but at least it's saying, hey, this is here to stay. The digital assets are something that's going to happen. And an enforcement group being created there is helpful because now you have someone looking at it and dedicating time to it. And I think this is really one of those inflection points where I'm talking U.S. government, but global as well, starting to say, okay, this asset class is here to stay. So now start to regulate it, which is great because I want to know the rules. I just want to know how do we classify things, who's in charge, who's saying what. And I'm just talking in the U.S. right now. So you got the CFTC, SEC, who's going to regulate what, who's going to do this. As a Nevada trust, there's a New York trust, there's a South Dakota trust. Like, what am I allowed to do? What MTLs do I need? Just getting that clarity would be great. But then on top of that, you're seeing the Blockchain Association, I think is great because they're coming together. We're pushing initiatives to say we need to do this globally as well. So like the UK can identify something maybe as a security, but then in Canada they'll see it as a commodity, and it just makes it really difficult. And if we want to empower and continue to grow, we need it to just really kind of mirror the traditional infrastructure and just say, okay, this asset is considered something more of a commodity for this reason. This one is a security for this reason, and then we can start to really define. And to your point there was like, look, it's really difficult because we kind of know what Bitcoin is, but new tokens coming in, what is it, and how do you classify that? And we can get some good rules in place, and as we have more attention there, it's gonna be really nice for our customers. All of us here, we're really B2B to C, and we want to enable those fintech innovators to do things, and it's easier for them if they say, okay, I want to do a smart contract, therefore I'll be regulated this way, and these are the things I need it to do because I want to make sure that I'm able to operate and do the right things in this place. And as we do more of that, I think it's gonna be great.
My turn.
Yep.
This is a big year. This is a very big year. The executive order that came out was interesting because it didn't ban. It talked about innovation. It talked about clarity. It talked about cooperation amongst regulators, which is a good thing. It was much better than it could have been. However, Secretary Yellen yesterday, in her speech, was clearly not supportive of innovation in the same way that the executive order came out. She was focused on fraud, illicit activity, and not necessarily the promise of this technology, which is my concern overall, is if we have if we don't actually think through the myths around digital assets, what we're going to have is an environment where we can't innovate. And that has significant implications, as we've consistently said. National security, keeping jobs in the United States, supporting small businesses, portioning out to people that don't have banking services. And Yellen, in her speech yesterday, she did focus on the fact that so much money, for example, is spent on transmitting. 10%, for example, was in her speech. But, so transmitting the people that are immigrants here overseas. But I am concerned about the environment that we're in. Gensler, for example, who is the chairman of the SEC, has proposed 2 rules, one on DeFi, even though it doesn't mention DeFi, another on exchanges. So if you're in this industry and you can be active in DC, I think it's wonderful to have regulation. And I'm not trying to in any way challenge regulators, but we need to be thoughtful about regulation. And I hope that happens. I'm seeing globally, I'm seeing this as well. Everyone's just interested in understanding. And I think the key here is education. So if there's a way that we can engage in the dialogue, in a healthy discussion, I think there is a promise for, really, truly, change in the world, which is a great thing. So I'm very supportive of the technology. Just need education.
Yeah, it's really interesting on your points. It is the theme tends in DeFi and cryptocurrencies to be kind of anti-regulatory, but it's really hard to build a business when you don't know what the guardrails are, and you don't know what the rules are, and you don't know what your risk appetite is, because you don't even know where it falls on the scale. And that goes from everything from type of asset to how you operate as an org, as a VASP, as a FI. God, New York, that's probably the most difficult place, I would think. And you watch what happens in Europe, where what they're doing with digital wallets, non-custodial, custodial, moving assets between all that. It's really difficult without clear boundaries how to be successful.
Yeah, I think Tom made a great point of, we're US only today, but international expansion will come, and there's even some state by state sort of differences as well. But not having that, assets classed as different things in different jurisdictions is going to be a nightmare.
It is.
Grow globally.
Yeah, by geo, by industry, et cetera. Yeah.
I mean, think about how hard it is for policymakers, though. I mean, they're trying to protect people, but they don't know they don't know the right way to do it. And so you don't want fraud, you don't want illicit activity. So it's just what is the right answer, and it is hard for to create the right framework that you can increase innovation and support the industry.
Yeah. The next question I have, Tom, which is for you.
All right.
Invoke the name of Jamie Dimon shortly here. This question is, where are we on the timeline of non-crypto native financial companies getting involved in this intersection of crypto and the existing financial infrastructure? And honestly, I think this question is touching a little bit on some people are going to have to buy into this to gain that clarity and gain that regulation and guidance. Have the early converts already gained an insurmountable advantage, or is there still room for others to catch up? And you coming from that big bank background, would love to kind of hear your perspective to lead the answer.
Yeah, I mean, I think in the last, I'd say like 6 months, I've seen a real change at Prime Trust as we work with what I call established financial institutions, the JP Morgan Chases, the Santanders, the State Street, the Bank of America, the Wells Fargo, the Barclays, all the big banks. It used to be, they would come to us saying, why should I get into crypto? Like, why is this for me? More of the why. Now the questions are, how do I get there? My consumers want this. Like, my customers are coming to me saying, we want this, and we don't know how to get there because it's still, I want to say scary for them because it's not regulated well. It's a risk to the larger financial institutions. But the fact that they're asking how instead of why, this is a very influential group that can make it happen. So their customers want it. Their consumers definitely want to get into digital assets. So this is that tipping point where now that they're asking the how instead of the why, that's going to be great because now we've got support on the traditional side as well as the non-traditional side that's been growing this. So I think this is like the best inflection point. We talk about like Jamie Dimon. He's a brilliant man. I mean, he definitely looks at things, and I always am watching how he interprets markets. I think he did an amazing job in 2008 during the mortgage crisis, and how he steered through that. And a lot of people say he's anti-digital assets. He never really was anti. He was saying, I don't see it as a tradable, especially Bitcoin, currency. He believes in the public ledger and believes in this whole idea of like the decentralized but public. And I think he sees Bitcoin more as an asset that you would hold, kind of similar to gold, and you look like the stock to flow. It makes a lot of sense with Bitcoin that way. And I think Bitcoin is great because it was kind of that first established thing to come in and say, look, this is like the way currency should work. I mean, you know exactly how much is going to be mined, when it's going to be done. 2149 will be completely done. At first, you get a lot, the assets for mining, then you get more fees, and it becomes a stable underlying asset that we all understand that doesn't really grow. It doesn't have a lot of use cases. You can build things on top of it. You can get other chains come up like Ethereum and this, which do more. But the fact that Bitcoin kind of came in there and everyone understands that, and you look at like stock to flow and you realize this is surpassing gold. This is a very good backing, use your name, I guess, backing of everything that's coming. And I think that any economist, anyone in the financial sector understands that. So it's a really good way to get it going. And now with Bitcoin really established and more certain, we're going to just see more and more financial institutions come in and more growth and adoption.
Dan, Kristen, anything to add?
Yeah, I mean, I think you said it well in terms of it almost doesn't matter what some of these people personally think about Bitcoin. Bitcoin's probably going to win anyway, and they recognize that their customers are going to need access to it, and that they're going to start to lose their customers if they don't provide it. So regardless of what their sort of personal opinions, agree there was a big tipping point in the last sort of 6 months in terms of the certainty of we need to do something now. And then banks are also seeing, they're watching their checking accounts and they're seeing the outflows going to crypto exchanges, and that's money that could be sitting inside their bank. They could be leveraging or they could be capitalizing. So they're seeing more money go to Coinbase alone than Walmart, Target combined, and so it's a huge commercial opportunity to them. Regardless whether they think Bitcoin is the future or not, they're sort of forced to come on board and support it.
So Bitcoin is one of many digital assets, and I think people recognize it globally, Bitcoin. They think all digital assets are the same. They're not. They're different blockchains. Bitcoin happens to be one that has two primary purposes, store of value or medium of exchange. I think the concept of a medium of exchange, that whole currency concept, many countries view that as a challenge on their sovereign, their independence and their ability to control money. And I don't think it's received well. Notwithstanding, I think many people around the world have found a use case for it, and that's why there's a lot of wallets that are growing, and we've seen it in the Ukraine. I mean, it's such a great use case to help people that are, in trouble, in need, to help buy medicine and help their, to store their wealth and to be able to, get out of the country, just buy a ticket on a bus. So there's a lot of compelling use cases for Bitcoin, but what we need to sort of recognize is not just Bitcoin. We do have an entire revolution, Web 3.0, growing, and that's something, I think people are just starting to realize, though. Again, we're at Bitcoin 2022, so I'm not trying to discount Bitcoin at all here. So, yeah, that's my response.
I would be curious to follow up on something you said, Tom, as well, which is how, and that generally is, hey, I want Bitcoin as an asset class, and so what is going to be the catalyst that moves it away from being merely an asset class, digital gold, into a utility for the market?
I think one of the things that we're going to see is the wealth management coming into digital assets, and that's going to be huge. So, in the U.S., I'm just going to talk about U.S. right now, 75% of the assets that play, the liquidity out there is actually retirement wealth income. We did announce with Swan, we are fully licensed custodians, so we're doing IRAs June 1st, right? So IRAs can come in. So you can roll your 401k in now very easily, click of a button through Swan, and get that retirement in there. And I think that's going to really drive it. Because Rick Edelman has said he wants 10% of his fund into digital assets. I mean, they're seeing the growth. The financial institutions want in there. It's like $12.2 trillion is wealth, IRA wealth alone in the U.S. And that's insane. That was in 2020. You think about that money coming in and then starting to buy into the digital assets. And if you think about with a 401k, you're holding longer term. So most of it's going to be Bitcoin at first, and we'll see other coins and other tokens come in. But there's a lot of consumers out there saying, I know people are making a lot of money in Bitcoin. I have no idea how to get it. I don't know what to do. Like my mom wants it, and she doesn't no idea how to do this. But when she realized, oh, I can take a 401k, roll it over to this, or one of my IRAs, and roll it over here, and just push a button, and now I own Bitcoin. She wants to do that, and you're going to see more and more people do that. And I think that's going to be one of the bigger catalysts that are going to come this year. We're going to see wealth management coming in here, and traditional financial institutions. Wealth management is where the money's made. Investments banks make the money. Money makes money. So the more that wealth comes into the digital assets, and the digital assets become the biggest driver of that wealth, that they will drive their own wealth. And I think that's where we're going to see our big tipping point and the big products coming out.
Kristen, Dan, you share that view?
I think the digital gold narrative is sort of holding Bitcoin back a little bit now, and I get the sort of the case and the analogy to gold being something that normal people can wrap their head around as an investment, as an inflation hedge, as a store of value, but it's much, much more than that. It's a huge use case. Obviously, Bitcoin can grow and get that alone, but it was designed as a peer-to-peer electronic cash. It is supposed to have utility. You're not just supposed to just buy it and stick it in a vault and wait, and that's it. I think this week has been proof that it's almost been Lightning 2022. There's a lot going on with Lightning and the scaling capabilities for people to actually make payments and use it and extend it now with Lightning Labs with Taro to use non-native Bitcoin native pieces on Lightning as well. So I'm really personally interested in, and really what Bakkt tried to focus on is how do we provide the utility around these around Bitcoin and other cryptocurrencies rather than just solely treating it as an investment asset class, which again is a great first use case, but it's not the extent of what it can be.
I want to add one that I think you're really right. I mean, look at Litecoin and Dogecoin. As much as it was a joke, it's built like Litecoin. It was a joke, but the whole reason why it was able to take off was people were like, "Oh, this thing actually works. I can move it fast," and there's no one really profiting from it. It was like Elon Musk says, "Oh wow, Dogecoin, I'm going to back this." And it was like originally a joke, but it's not a joke because it was actually built on a decent protocol that was created to actually transfer fast. And it was like, okay, you can have the Bitcoin, but now there's something that's going to kind of, hopefully, if we all use it, peg around $1 naturally and just become a currency you can use. So when I say Bitcoin, I'm not saying just Bitcoin can't have a utility. I think it's the underlying layer that got everybody comfortable, and then lets things like Litecoin and Dogecoin and all those come out and get these utilities. So I mean, I'm agreeing with you 100%. I think it's just that kind of stuff will continue to expand and make it so that people understand this, financial institutions understand it, and just converts right into that bridge into, oh, this is actually what we do today, but easier.
Well, a couple of things. There's this great wealth transfer that's happening in the world where the older generation is transferring, I don't remember, it's like $67 trillion in the next 10 years to the younger generation. And people that are, younger tend to be natively digital, and they tend to, when I speak at, universities and classrooms and I ask the audience, who here owns a stock? And there's nobody. And then who here owns Bitcoin? And 80% of them raise their hand. So there's definitely a movement of wealth, particularly for those that are younger, to invest in what they perceive as, how are we doing on time?
We're fine.
On digital assets. But I guess, and I think that's going to continue. I think we're going to see that. I'm seeing certainly wealth managers. We get consistently with institutional clients that say if we don't offer a product, there's a crack in our sidewalk. If there's a crack in our sidewalk, we potentially could lose our clients. We need to offer something. And it's recognized with almost every single wealth manager. You have to offer something or your clients will leave. On a different note, though, I really want to get back to what you were saying. This is just the beginning. We're in like 1993 of the internet, and this is not just about money. This is a technological revolution that we're going through right now, where we are talking about Web 3.0, and all these tokens are not just money. It's not money. It's technology, and that's what I think I'd like people to really focus on is what can this technology do? People talk about supply chain management. Whoa, what does that mean? That means that you can see something from the very beginning all the way through to where it's inventoried to what it can do at the end. This is healthcare change. This is data that you can sell to you can make money on your own information. This is a completely different world, and I just don't want to focus just on Bitcoin and the wealth. But it is a narrative, and it is true that wealth managers are expanding their offerings to include digital assets, for sure.
Money's definitely the biggest use case, and the most important one for the world today. But there are many other things you can do as well, and I do think the utility of Bitcoin and with Lightning now as a payment form is still very early relative to some of the other use cases and even the other platforms in space, but going to be a huge change over the next 6 months. I think I'm jumping ahead. So
No, it's great, and your point is well made as well, Kristen. That it is, yes, there's Bitcoin, the underlying technology. We're going to see all sorts of amazing revolution in multiple industries.
So I get this question a lot. So why can't we just use the...
You can't ask questions.
I can't ask questions. Oh, I can't.
You can't. Go ahead.
Ask him a question.
I'm going to slap you. That was a joke.
Yeah. We all know.
Ask a question, sorry.
So I get this question. I really would like to hear how, seriously, how people answer this question. Why can't we just use the digital dollar? Why do we need all these tokens? Why do we need them?
we need them because Bitcoin has no counterparty risk, right? It's not controlled by anybody. The inflationary supply is programmatic.
Why do we need Solana? Why do we need algorithms?
I don't know that. Yeah.
All right. So getting back on track with Bitcoin, I have one. This is the final question. But looking down the road, because we've talked a lot about it, and you've brought up a lot of different industries, what's the most promising technology, an area you guys think will have traction between this convergence of the legacy systems, financial systems, and crypto and Bitcoin? And so I'll just, for example, from my point of view, I work in the payment space. So what do I think I would go to? What do I think it might do to a Visa or MasterCard, kind of these traditional rails and those fees and associated components? But from your respective industries and where you're playing in the space, I would love to hear where you view this is a huge opportunity for this convergence, because I think, could be wrong, there's going to be a point of time where you're working in this space before it all goes to one or the other, or that balance is shifted to either new technology or back to the old technologies. So, Kristen, go ahead, lead it off. Tom?
Okay.
Chalking it up. Actually, I'll jump in with something that Kristen said I thought was interesting, because I think it's relevant here. You mentioned that the next generation coming up is embracing digital assets and they're used to Bitcoin. What's actually more exciting about that is the fact that they don't even think about the digital assets they are trading every day. And I'll give a great example. When my son was 16, he was with a friend. They were playing some computer games. I said, Jake, you got to watch the car. That's, you want to drive the car, you got to watch the car. He's, I'm playing a game. I said, look, you got to watch the car. I mean, you know the rules, and you to drive the car. He goes, all right. So he gets up and he asks his friend, hey, you want to watch the car with me? His friend goes, I don't want to watch the car, I'm playing the game. And I don't know what they're playing, but my son goes, I'll give you 20 hay barrels if you watch the car with me. He goes, oh, okay. And he got up and did it. Literally, they're playing some game where there's like hay barrels or whatever that he got, and he literally, without thinking about it, used that in the real world to get labor to wash his car. And at that moment, I was like, oh my God, this stuff is real, because they're doing it without thinking about it. And I think that is where this inflection point is coming. And you think about like Visa, we talk about Visa, MasterCard, right? That was, started from Bank of America card. It was a merchant in San Francisco, and you had a piece of, it was a imprinted metal card with an account number, and that was the first time you had credit at a store. And then it became this thing where they wanted people to carry plastic. So you can, there were commercials back in the 70s, a guy running and paying at 7-Eleven with a piece of card. Like, it was just so not normal. But the generation that kind of came after that always had a credit card. Of course you did. And then the next generation is like, oh, you don't even have the credit card. You just have, you can put it online, or you have Apple Pay, it's in your phone, all this stuff. And you just think about that. Every generation that comes up, the world is just different for them because they didn't remember a time when that didn't exist. So this generation coming up right now doesn't know a time where you didn't make money by doing something online and trading that in the real world. And I think that's going to be just something that is absolutely revolutionizing all this, and this is why we have to go there, because the next generation is expecting it. They want this, and that's going to just empower and move everything.
What I find so interesting is that the older generation's always telling the younger generation they don't know what they're doing.
Yep.
They're always like, that bad generation, those whatever they are, and it's like, throughout history, the older generation thinks the younger generation's just out of their mind. And hopefully, I think, hopefully because it's going to change. Like, it's going to continue. As you mentioned, I mean, people are going to have their avatars. It's just going to happen. Just start thinking about what your avatar is going to wear, okay? Because it's soon. And, and you're seeing it now. Like, all the major commercial entities are going into the metaverse. And they're building their shoes and their houses and their property with their paintings, and it's happening. And that's actually, it's interesting, the use case for the metaverse, people see that as much more tangible than, I think Bitcoin, magic internet money is a little harder than I'm going to go build a house on the internet and get a dog and take care of it and, et cetera. I think so. Interested what other people think.
Yeah, I think it's easy. It's quite exciting about the future down the line where we could be, where we are. And then there's the sort of what are the types of institutions that we work with. What can they actually do today, and where can they provide value today? And I think we are going to still be in a sort of hybrid world between the it'd be great when we get to this in 10, 15, 20 years, but practically today people still rely on credit cards, debit cards, and all the infrastructure, imperfect as it may be, improvements that there can be, but how do we still put a foot in both worlds and actually make something usable today, leveraging the existing infrastructure, the existing rails and distribution that's in place, without having to sort of rip and replace absolutely everything and go to that world that some of us maybe want to see in the future. So I think it's going to be still hybrid for quite a while, and working with those players that some in the Bitcoin space are working to replace, and there'll be some working to help them adopt. And either way, I think ultimately, or at least in the near term, to your point, that people may not want to necessarily use Bitcoin as money today, or want to hold it. But they may not even know they're doing it. It'll be an abstracted rail under the hood that companies like ourselves or the institutions we work with, you make an international remittance, dollars to euros. The consumer doesn't care whether Bitcoin's under the hood or not, but if it's faster, cheaper, we'll leverage it.
Yeah, the legacy infrastructure has a very long tail. I like this. Got a checking account recently. I got the checkbook. It's like, you get it, So it's. Yeah, and then you're in line behind the one lady that writes the check. But it's funny. There's a very long tail behind the credit card, and I just wonder if that's the place that's going to be bridging that gap over the next however long, and then maybe you're the last credit card provider, like for the one guy. Well, 50 years from now that needs a credit card.
Yeah, to your point, I mean, like we talked about the internet in the '90s, and like credit cards allowed the internet to boom, right? If we didn't have credit cards, we wouldn't have had a way to pay at that time. I mean, being able to do that. And then ultimately the debit cards come in and stuff like that. So I think you're absolutely right. We're seeing it again, and and I'm obviously a Bitcoin enthusiast. I see all of it, but at the end of the day, what I love about Bitcoin, no matter what, it is the most stable. It was the first one to really define it, and you've just seen all this other stuff come off of it. And like I said, Bitcoin, because it's the Bitcoin 2022 conference too, I'm trying to talk about Bitcoin. I just think Bitcoin, the adoption it's been able to get, the legitimacy and showing this, because we had Eagle and other things before, we're riddled with fraud. This is the first one that's like decentralized. No one knows who Satoshi is. We have speculation, but it was put out there. It's like, let's do this right, and let's build other stuff on top of it. And the next generation can capitalize on it.
I'd like to go back just quickly to just touch on your point about the internet. Yeah. From 1993 to 2000, President Clinton took an initiative to create a regulatory framework, and I'm going back to this because it's important, where he did public-private, university, he trained high school teachers, he put computers in schools, he really pushed an agenda, moratorium on taxes for 7 years, to foster innovation, really embrace it. And that's what made the internet grow in the United States. And that's why adoption happened. We went from no computers in the classroom to every classroom having a computer. And I think we need to, hopefully, the Biden administration will similarly create a framework that fosters this innovation on every level. That's what we really need, I think.
Yeah, and it's difficult because the existing financial institutions have been around a long time with very clear frameworks, very clear boundaries. And they've had years to kind of build on use cases that prevent fraud, prevent laundering, prevent, bad actors from entering the system. And at this point, maybe that's not even the case anymore. Yeah. maybe it is more inclusive. We have 30 seconds left, so before we get into any final questions, I just want to thank each of you for joining this panel, and we'll wrap it up. Thank you, and thank you all for joining us.
Thanks.